We've got the Silicon Valley Bank president, Marc Cadieux, coming up. What a difference a year makes. Thank you so much for being here.
Thanks for having me. It's great to be here. So maybe just a level set before you go to your first question, just for everyone's benefit. There's a couple things I cannot talk about today. It's events prior to March 10th, any active litigation, and SVB Financial Group is a separate story today from SVB Commercial, a division of First Citizens Bank, and so just wanted to blurt that out. That leaves plenty, of course, we can talk about. So.
Yeah, and thank you so much for being here. I know it's...
Yeah, of course.
So just tell us, what has the last year been like for you? I mean, rebuilding some of that trust, rebuilding the relationships. What does your last year look like?
I think I'll start by saying the last year has been a lot about trying to correct what I think of as a false narrative, that SVB went away, SVB left a void, SVB isn't here to do all the things that we did before. The truth is, we never left. We've been open for business, first as a bridge bank, then following the acquisition of First Citizens.
You were yes SVB for a period, right?
Yes SVB is...
it is hard to have the word failure. I mean, it is technically true that SVB failed, and that sticks with people.
Yes, and back so quickly at it, I think, is the story we continue to get out in that false narrative we have been trying to correct ever since, and one of the reasons I'm so excited to be here today to talk about it. So you asked about the last year, and it's been, again, right back at it, doing all the same things we did for 40 years before. All the same lending at the same dollar amounts across all the different sectors and stages of development. We originated $3 billion in our tech and healthcare business alone in new loans in the last 9 months of 23, together with our new colleagues at First Citizens. One of so many data points that I think tell a story about being back on that journey to rebuild the trust by doing all the things we did so well before.
You lost $40 billion basically on March 9th, right, during the crisis, and there was a fear you'd lose $100 billion. How much of that did you get back? I think you've talked about getting something like 80% around of depositors back. Like how much of the money came back?
So I think the best way to think about this is what happened after. And so starting in April, and again, I'll contain my comments to through the fourth quarter of 23. We're a public company, and so I have to call that out. But starting in April and through the end of last year, deposits just in the SVB division average deposits have remained stable. And that, I think, is probably the best evidence of all when you think about diminished venture investing. Everyone has 2 banks now. Many of our clients are still burning cash. That stable deposit story, we think, tells a story about what's been going on under the covers, which is, I think you mentioned, 81% of our clients are still our clients. Thousands have returned, and we expect in the fullness of time that that remaining 19% that's out there somewhere, that we hope to bring them back as well.
I open with this idea about trust, and you talk about bringing back those 19%. Can you take stock? Like, so much of banking at its core is a trust relationship. A lot of people don't want to think about how their bank works. How do you reassure customers when it's like, I just assumed Silicon Valley Bank would work. Now we've seen it not work one time. Why should I trust you again? Like, what do you tell them?
So starting with all the things that are so different now. Being part of First Citizens is a completely different financial picture. A very stable deposit base, very well capitalized, and then with extra liquidity that came with the acquisition. And so that right there just creates a completely different picture. The rest of it is, I think, about showing up consistently, being the best version of ourselves, and doing all those things that mattered so much to our clients before. And I think matter even more in times like these when our innovation economy target market is continuing to go through some tough times. And it's one more reason why it's great to be us, open for business, and able to support our companies, our clients, when they need us the most.
And I want to get into some of those specifics. I mean, I'm curious what you think about like trust on the other side. I mean, there is a sense that it was a two-way relationship, and venture firms, part of what made Silicon Valley great and makes Silicon Valley great is understanding the top firms and having a reciprocal relationship with them. Do you feel burned that people were so quick to run in the panic?
No. I do not. I think this is it's another spin on intent and impact. I don't think there was any intention to bring down SVB. That was an unfortunate impact. And as I think we saw immediately thereafter, a outpouring of support for the venture community of, in effect, this is not what we intended and we really want them back. And again, it's great to be back.
So tell us a little bit about SVB under First Citizens, not a bank that was on Silicon Valley's radar necessarily before this deal. Why does First Citizens make sense, and how is sort of that integration coming together?
Yeah, so First Citizens makes sense for so many reasons that would perhaps be less obvious when you start at the appearances. You get beyond the superficial. What I've come to discover is my new colleagues and the folks that I share time with now, an executive leadership team, are just like us in all the ways that matter the most. They care deeply about relationships. They care about long-term thinking. They care about being, financially stable, but they're not averse to taking risks so long as it's well managed, well understood. And so, again, a lot of things that are so many more similarities than differences, and that support has been great. The second thing I would say is this might be the first instance, maybe there's another one out there somewhere, but generally speaking, when banks acquire other banks, they usually integrate them, and the magic, the value that was there is oftentimes lost. First Citizens has taken a completely different approach of kind of ring-fencing SVB, letting SVB be SVB, and ensuring that that value proposition is preserved and not broken in some way, shape, or form. And so you asked about integration specifically. We've been very patient in our approach in planning it out and making sure that we make the most of all of what SVB brings to the broader First Citizens. And we're really just now, again, as talked about in our fourth quarter earnings, just now getting to the what I think of as operational integration of that we expect to complete over the course of 24. But be that as it may, at the back end of that, I don't think our clients are going to notice any difference at all. The SVB Solutions platform is going to remain intact.
Do they see First Citizens? Like, how much is First Citizens on your customers' radar at all?
So one of the questions that we got, and I think in tracking social media, was who is First Citizens? Because they weren't as well known prior to buying. And so I love questions like this because it gives me the opportunity to talk about First Citizens. And they've been around for 125 years. They've been amazingly successful. And it is now a dramatically different financial institution with the acquisition of SVB and the acquisition of CIT roughly a year or so before they acquired us.
And let's talk about like specific products right now. Venture debt is obviously so core to what you guys do. What's your view? We're sort of in a funny moment where we have all these banks here, some of your former colleagues, competing for the same business, but this is not like prime Silicon Valley. It's not 2021. We're sort of still in a downturn. How is that affecting the competitive dynamic, and then also just how you think about loaning to startups when this is not necessarily the bull market for startups?
I, again, continue to be open for business, doing all of the lending that we did before across all segments, including venture. I'm not going to speculate on this statistic, but a healthy chunk of that $3 billion of loan origination I talked about before is venture debt origination. And yes, our target markets are facing some headwinds and continue to, but brand new companies are getting funded as well. In fact, we've seen some, what we hope are green shoots in that space, and I would contend that any newly minted Series A company today is probably on average, pound for pound, a better looking prospect, and we want to be lending to those all day long, and we are.
Right. There's an argument that this is a good vintage to be lending in.
Oh, yeah.
Right. Is that your view, or?
It is, generally speaking, it is at the early stage of the spectrum, and then you can get into different sectors, and it might not be completely even across the board, and then you get into those mid and later stages, and right. But that is, I think, one of the things that we bring to the table is that 30 plus years of venture lending through multiple cycles enables us to originate smartly, but also be that patient, thoughtful lender, right? Nothing ever goes from great idea to great company. There are always setbacks along the way, and one of the ways SVB long distinguished itself and continues to is how we approach those situations, understanding that that is what happens and not freaking out when it does, and working with our clients. And again, in an environment like this is one of the most important things we can do for our clients at this moment.
Have you had any of those cases post-acquisition, or have your feet been to the fire on a case where you have to be particularly sympathetic to a startup at the moment?
Oh, sure, yeah. Unsurprisingly, as companies, we've all heard a lot about companies working to reduce their cash burn, and oftentimes debt service can be a significant chunk of that. And so, yeah, we've certainly had those conversations with a number of our clients who need some relief as they try to get from here to where they're going, and we welcome those conversations. Again, we've done this for 30 years. We're not going anywhere.
And how early of a company will you start banking? Like pre-venture, or do they need to have some venture capital funding?
So banking starts, we'd love to meet them at formation stage. Like right after you sign those formation documents with your lawyer, come on down. We'd love to be your bank. We generally start lending post-Series A.
And how are you thinking about sort of deposits when lending, or like do people have to keep 80% of their money with you if they're taking loans from you?
So we, like every other lender, have we're relationship bankers, and so we want to be the relationship bank. And in connection with that, we, like every other lender, do require some percentage of total funds, not necessarily on balance sheet deposits, but total funds, to be with SVB, either deposits on the balance sheet or managed off balance sheet by, say, SVB Asset Management. Following the events of last March, we actually took that requirement down to 50%, recognizing that everybody has two banks now. We're on a journey to rebuild trust. There's no rush. Again, we're with First Citizens, and there's plenty of liquidity, plenty of support, and so we can be patient on bringing back those deposits, and that has been the approach. We're seeing it get back to a place now where 80% is around the market standard, and so we've drifted back to that place too. Again, the crisis is well behind us, and so we're back on that level playing field. But again, the key point is we're not requiring the deposits to be on balance sheet, and that is different from some of our competitors who really do need those deposits in order to originate loans.
What do you tell people to give them confidence in the deposits right now? There was a period where you guys could say, oh, we're the safest bank in the world, where the FDIC is totally guaranteeing these. Or like, what's sort of been the storyline along the way in terms of how safe the deposits are, and what is the message at the moment?
Sure. Again, it all starts with First Citizens, and we are, yes, we're the SVB division, but we're also First Citizens. One of the fun stats from the fourth quarter is all of deposits plus all of that extra liquidity support I mentioned covers uninsured deposits around 270%. 270%. So you could, take every dollar out 2 times over, and it's all still going to be fine. That puts us in, I think, a very rare place relative to other financial institutions. I'm not sure what the very largest could say about that, but when I think about a financial institution our size, roughly $220 billion or so in assets, that is a pretty good story to tell, we think, and it's been very well received by clients and investors alike.
What is your view? We touched on this, but I wanted a sort of more fulsome answer on the comeback, or where we are in the sort of, they're 2021 wild, 2022 going down. I feel like 2023 we entered it was like, oh, maybe it'll come back and we'll feel good, and it still seems like venture activity fell. Do you have a prediction specifically on 2024 and whether we'll see more activity than we saw in 2023?
So here, one of the other things SVB has long done, in addition to all of the banking services, product service, et cetera, is insights and connections. And on the insight front, we just published our most recent State of the Market report a couple weeks ago, where we talk about the environment and our predictions for the year ahead and things like that. And so turning to that, yes, 24, we think, will be another difficult year. Hopefully not as difficult as 23. Hopefully things will start to turn. I mentioned green shoots earlier, and that is an encouraging sign. And my hope is that we are closer to the end than the beginning, though I would preface this again by saying I can't tell the future perfectly, and we're certainly prepared for worse. And if it's better, that's fine, obviously. Better sooner would be great, but in the meantime, again, it's a great time to be us, because as long as this tougher weather lasts, we have an even greater opportunity to be there for our clients and to correct that false narrative I mentioned before.
SVB is in the relationship business at the end of the day, and the people, there are obviously people that have left, some of them are being sued. Who are the sort of core anchors of SVB right now? What are the teams that you think have held strong? And what can you assure people that those relationships they have are still at SVB?
Yeah, all of them. And I'm not exaggerating there. We still have, so much has been written about all the folks that departed. What gets missed again in this narrative is all the folks who stayed, right? 80% of the folks that were there before are still there. We have the biggest group of market-facing bankers in the U.S. of, I expect anyone, 1,500 strong still. And that spans, again, all of the teams, all the sectors, all the segments. And so it's all still there, and we're still delivering across the board for our clients.
We sort of jumped into it. I want to hear a little bit more of your personal story. Were you surprised to become CEO of SVB, or how, when it all, the fallout was happening, how did you sort of ascend to CEO, and what was your sort of personal story there?
So I'll just do a quick title correction. I'm a division president.
Oh, president. Yeah, sorry. Yeah, not CEO.
Don't want to step on anyone's toes.
Right, yes.
So in the initial innings of the Bridge Bank, I had been the chief credit officer for the prior decade, and so my initial focus was entirely focused on restarting lending, in part so folks could draw on those lines of credit they were depending on to make their payrolls, right? And then when we reopened the bank. And so that was my initial focus until about halfway through the second week. And as you might imagine, at that time, a number of us were wearing multiple hats, and our Bridge Bank CEO at the time, a gentleman appointed by the FDIC, asked me to step in to be the interim head of the commercial bank, which I was, of course, happy to do. We were all doing anything and everything we could to make this turn out right. And so then met my new colleagues at First Citizens that first Sunday night. And while I did mention in that first meeting that I'm the chief credit officer, actually, I'm not really the president of the company, they elected to keep me in that interim role and ultimately made me the president in June.
I know you're limited on what you can say about the past, and we're going to dig into that in the next panel, but, the sense, the actual, venture debt, the strategy as SVB, besides the bank's holdings and the investments in terms of long-term securities, do you think that has been validated or by this acquisition, or how do you think about the actual, lending strategy of, I guess, the OG SVB?
Yeah, I think the lending strategy of SVB was, I think, the record speaks for itself. It was very successful. We had great credit quality, and that, we proved that out over a number of decades. So, and again, we still have all the talent to do that well, do it reliably, and so that continues on.
We're gonna throw it out to questions. So think of your questions, and there'll be people running around with mics, and I'll ask a question while you think. What does the next year look for you? I imagine part of it is okay, we've hit the 1 year of this crisis. Hopefully we never have to talk about the crisis again. What are your goals just sort of as a bank moving forward for the next year?
Yeah, so it's really, if I were to boil it down into two big overarching themes, the first would be everything we were doing in 23, right? That false narrative, that rebuilding of trust, all of that happens if we continue to show up consistently doing all the things that we did before that were so important to our target market. And so that is for sure goal number one, matters a lot. But then I mentioned the operational integration, and we're into this really interesting point post-acquisition, where we're now starting to figure out what is the best, most thoughtful way to put the various pieces of the broader First Citizens commercial bank together in a way that enables us on the back end of operational integration to deliver an even broader, deeper, better value proposition by virtue of being able, for example, to avail ourselves of the products and solutions on the CIT platform that would be of interest to our clients and vice versa.
What's that, sorry? A CIT platform?
Yes, CIT was the acquisition First Citizens made roughly a year or so before they acquired us. And there are a number of complementary vertical business lines there that we think will be of great interest to our clients. And so you could sum this up by saying my other big goal is to create an even better version of the SVB that was there before by virtue of all that is right there with the broader First Citizens that we are now a part of.
Questions?
So what's the client mix look like now? I don't know, software tech firms, biotech, venture. Do you still handle venture funds, stuff like that? I don't have some exact numbers, but just roughly,
Yeah, so broadly speaking, all the same sectors, stages of development. You mentioned venture, so our global fund banking business, venture firms and funds, private equity firms and funds. It's really the same, and again, everything from the very earliest stages all the way up to large corporates and everything in between. While there was roughly 20% of employees in my org, the commercial bank org, that departed, 80% remain. And so in some instances, clients have the exact same team serving them that they did before. In other instances, maybe that, some of those people are still there and they've met some new ones. But the wonderful thing about SVB is we had such a deep, deep bench of talent that our ability to backfill from our own resources was there from the beginning, and so we never really skipped a beat in terms of our ability to be back in front of our clients, maybe with a new banker, but back in front of our clients.
Another question? Yeah, in the back.
Marc, thanks for being here. I'm curious, this is the first bank run that happened on the internet, right? I think WAMU was the last one. I mean, the ability to get money out that fast from a bank, do you think needs to be regulatory change related to that so that couldn't happen again, where you could take $28 billion out in 24 hours? I mean, I'm just curious. It was it was the first time that had ever happened. So I'm just curious, your comments on that.
Yeah, so as noted, the run was unprecedented in its speed and scale, enabled by banking on your phone, and so much has been written about that, and we will. It remains to be seen in the fullness of time what, if any, regulation we'll see come from that. What I'll say there is, banking's a regulated industry. It should be. I've long said regulation makes us better as a business, and we want to be the very best version of ourselves. That's what the clients of the Bank for the Innovation Economy should expect from us, and that's what we strive for every day.
But do you think there should be some rules for your customers about how quickly they can withdraw funds?
I think that would probably upset the apple cart a little bit in terms of, part of that trust and faith you mentioned before in the banking industry is based on I can get my deposits when I need them. And so I would be, personal opinion, I'd be surprised if that's where this went. But
the question was about the relationship banking, sort of private wealth, and how much activity there is with SVB.
So, and yes, exactly. I'll repackage a little bit in that there was another entity part of SVB, we called SVB Private. And so when First Citizens acquired SVB, they acquired the commercial bank part that I run, as well as the private bank. And while SVB Private has recently been rebranded as First Citizens Wealth, same people are there, the same solutions, the same focus on taking care of the individuals that occupy those first two important categories, right? The entrepreneurs and those innovation companies, and then the investors that support them. Those individuals working in both places still need those same bespoke product services, that same banker who speaks innovation economy and knows what the unique challenges of an entrepreneur or up-and-coming venture capitalist, let's say, might be, and that is all still resident within First Citizens Wealth.
Are they doing the same math? So much VCs are going to be rich in the future, startup founders are going to be rich in the future, and SVB sort of had a good sense of the trajectory of that and some confidence, and who is safe to give personal loans to. Are you guys still doing the same math, I guess is the question.
The same math, I would say, we're still doing all the same things that made us successful before, including taking care of founders, investors, et cetera, within that part of the organization.
Marc Cadieux, what a difference a year makes. Thank you so much.
Thanks so much for having me.
Thanks.